Listen to me. Are you sitting on a life insurance policy that is suffocating your monthly retirement budget? Every single month, you write out a check for hundreds, maybe even thousands of dollars in premiums for a policy you bought 20 or 30 years ago. You bought it back when you had a mortgage to pay, kids to raise, and a family depending on your income. But today? Your kids are grown and financially independent, your mortgage is paid off, and you are living on a fixed income in retirement. So why on earth are you still burning your precious retirement cash to pay for coverage you no longer need? I know what you are feeling because I hear from retirees every day who are terrified. You are terrified of running out of money in your 70s or 80s. You see inflation eating away at your savings, healthcare costs rising, and you feel stuck. You think to yourself, if I stop paying these premiums, my policy will lapse and decades of my hard-earned money will vanish into thin air. Or maybe you look at surrendering the policy back to the insurance company, only to discover that the cash surrender value they offer you is an absolute pittance compared to what you put in. It makes you feel trapped, frustrated, and cheated. That brings us to the big question, is a life settlement the right way to unlock that hidden asset and turn your life insurance policy into cold, hard cash? Let us get real about what a life settlement actually is. A life settlement means you sell your existing life insurance policy, whether it is whole life, universal life, or even convertible term insurance, to a third-party investor in exchange for an immediate, lump sum cash payment. That cash payout is typically much higher than the policy's surrender value, though it will be less than the full death benefit. Once you sell it, the buyer assumes all responsibility for paying those expensive monthly premiums, and when you pass away, the buyer collects the death benefit. Now, on paper, turning an unwanted policy into tens or hundreds of thousands of dollars sounds like a dream come true for your retirement cash flow. But do not sign a single document until you understand the fine print, because there are traps here that can burn you if you are not careful. First, let us talk about taxes. Do not assume that money comes to you tax-free like a standard death benefit. The IRS taxes life settlement proceeds in distinct tiers. The money you get back up to your cost basis, which is the total amount of premiums you paid over the life of the policy, is returned to you tax-free. Any amount above your cost basis up to the cash surrender value is taxed at your ordinary income tax rate. And any profit above the cash surrender value is taxed as long-term capital gains. If you do not calculate this beforehand, Uncle Sam will take a huge bite out of your payout, and you could wind up in a higher tax bracket than you expected. Second, watch out for predatory fees. The secondary market for life insurance is full of brokers charging exorbitant commissions, sometimes 20% to 30% of your payout. You must negotiate those fees up front and work only with licensed brokers who shop your policy around to multiple buyers so you get true market value. Third, ask yourself how this cash affects your safety net. If you receive a massive lump sum from a life settlement, that money counts as an asset. If you need long-term care down the road and apply for Medicaid, that cash settlement could instantly disqualify you from receiving government benefits until you spend it all down. Here are your exact, actionable takeaways before you make a move. Number 1, call your insurance company today and ask for your policy's current cash surrender value and your total cost basis in writing. Number 2, reevaluate your family's needs. Sit down with your spouse or beneficiaries and confirm 100% that nobody relies on this death benefit for financial survival. Number 3, if you decide to proceed, work with a reputable, state-licensed life settlement broker, get competitive bids, and consult a qualified CPA or tax advisor before finalizing the sale. Your money should work for you, not stress you out. Stand up, take control of your financial security, and protect your retirement.